Okay, perfect. So everybody, my guest today is Jasper Masemann, and Jasper is the principal at HV Ventures. Basically, he's focused on B2B models with a strong software or data component, and he's looking for product solutions to complex problems. Um, Basically, the company HV was founded in 2000 and has today more than 1 billion euros in capital management. This is the seventh fund generation, and it's one of the largest and most successful independent European early stage venture funds. They invested in companies like HelloFresh, Delivery, Flixbus, and much more. So thank you very much for being here, Jasper.
Thanks, Jan, for the invitation. Great pleasure.
Definitely. And so the company, the fund itself has been around for a while, and I know there are life cycle stages, let's say, to each fund. So this is the seventh version of the fund, right?
That's correct, yeah.
Got it. So have you founded the company back in 2000, or how did you get involved in the company?
Yeah, so no, I didn't found the company. We had 4 partners doing that who are still with us. So we have a very strong team, not much transition out of the fund. And we started the company with one LP, which was the publishing group Holtzbrinck. And they decided to do some things in the internet in 2000, which was very bold because, you know, the bubble burst after that. I actually did an internship with the fund in 2002. So that's how I got to know the fund. And in 2010, we decided to take more investors on board. So we spun off, you could say, the publishing group. And nowadays, in the 7th fund generation, we have more than 20 LPs, limited partners, with us. So we're very independent.
So you joined in 2010 or 2002 as an intern and then stayed on?
Yeah, we always kept in contact. They helped me with my diploma thesis, my PhD, and other things. No, in 2010, when they spun off, we actually had a discussion, but then I decided to start my own business, which was called greatcontent.com, and I sold that to a publishing group called Masemann, not Holtzbrinck. And actually, I joined when we opened up the Berlin office 4.5 years ago. So we based in Munich originally, where all the back office still is and most of the senior partners. And then we decided we have so many companies in Berlin, that's the larger ecosystem. So I was the first one here for half a year, and then more colleagues joined, and nowadays we're 7 people in Berlin. And I have to guess probably 19 in Munich.
And you basically, before, you were also an angel investor, right? So you had some investments made prior to joining the fund. So was that kind of a natural, because I know some VCs and that's how usually they start with. They start angel investing, or they were a founder who got an exit, then they have a couple of angel investments, and then they see that they are doing something right, and then they rather form a fund around themselves or join one. So was that kind of your journey as well?
Yeah, I think what I see, at least in our fund, and when I look at other European funds and partners there, every journey is a little bit different, and every investor has a different style. So we have people in our fund like David Kartusek, who was an intern at Holtzbrinck and stayed with us until he became general partner. He did Flixbus, so very successful general partner. And others like Christian Zaller, who's also general partner, founded Swoodoo. That company was bought by Kayak, you know, then went public, etc. And is here with us in the Berlin office. So for myself, I did angel investment because it was, I got to know some other founders. I was a founder, my business was cash flow positive. So I decided to do something with the money that I understood. I'm not so good with real estate. For me, it felt awkward, although I know there's a boom, especially in Berlin. And it wasn't the reason why I jumped on board with Holtzbrinck. The main reason was I like helping other founders. I was part of the entrepreneurs organization. I was a consultant at Boston Consulting Group before. So for me, it was kind of the natural path, helping others, being a founder myself. I like also being part in the company and seeing how the business is developing very closely, versus being a consultant where you just consult and then, you know, you're gone after 3 months. So being part of this 7 to 10 year journey, that's what I like. So to be honest, it was always my dream to become a VC in 2002. But it felt like, okay, I have to learn something before I can join a fund. But others might see it differently. And David, I think, is a great example that you don't have to be a founder to become a successful VC.
Hmm. Yeah, there are two types usually: the ones who are kind of coming from the analysts background, who never were founders, and the ones who were prior founders. So, what do you enjoy mostly? Because running a VC fund is completely different than running like a company. So, what do you enjoy from
Mhm.
your experience as a founder and now running a VC fund? What's better, or I don't know.
Yeah, so what I really enjoy being a VC is I meet with a lot of different founders. I obviously would love to spend much more time with each one of them, which is not possible. But seeing all these different business models, discussing how this can be big with the founders, seeing them dreaming, that's also what I enjoy, and helping them with ideas and with the discussion. And then along the way, we know we can put more money across various stages. So we invested in Flixbus, 100 million. We can usually we can invest up to 50 million in a company. So that's what I really like. The thing that I don't like as being a former founder is obviously I'm not so much operationally involved, or let's say not at all. We're not an operational VC. So sometimes it's feel like I still want to do something. I want to create something. So I do that because I'm our Salesforce admin for our CM system. I'm trying to do some stuff, at least create some stuff. And being a founder, I really enjoyed building something, seeing something being built, sitting in my company, seeing the things working around me. I was never a big fan of operations and incremental improvement every week. I think I am too curious. I like to do too many things at the same time. I even did that when I studied. I had 5 different resorts at the like responsibilities at the university apart from my studies. So I'm kind of a multitasking guy there, and it doesn't work well in a company. And also, I didn't like managing too many people at the same time. I really like this focus on my core 8 companies right now in my portfolio and being there for them.
Are you mostly focused on German companies only? Because all these brands that I think I've mentioned, they are kind of German, I think, companies. So is that or
Mm-hmm.
DACH region mostly?
Mm-hmm. So our core market is Germany. We want to see every deal, every early stage deal, even pre-product, pre-seed, however you want to call it, deal, and later. So we can also join a B round as a lead investor. When it comes to European markets, it's a bit more opportunistic. So we might have a connection to the founding team. We might know the topic well. We maybe have seen a German company, and then we're doing market research and actually felt that the other country's company is better, or we like it more. And yeah, I'm on the board of a company in Madrid called Lingo Kids, consumer subscription app for children. Another company called Verbit AI, who just raised from Stripes Group, which is based in Tel Aviv. Ultimate AI has actually offices in Helsinki and here in Berlin. But I can reach 5 of my companies with my bicycle in Berlin. Some other of my colleagues have companies across Germany. We have a lot of companies in London as well. So I would say as long as we are sure that, let's say, another company in another country is better than the German one, we would probably go for that one, because at the end of the day, you can also build a lot of unicorns in Europe, which we can see. But the core is definitely Germany. We're not very strong in France because nobody in the fund really is good with French. My Spanish is okay-ish. Yeah.
Got it. So you've mentioned 100 million euro investment in Flixbus, but that's not really Series A or early stage, right? So what are
No,
the
that's
typical early stage deals you're doing? So is this from 50 to 500,000 euro, or how would you break down your early stage investment?
yeah. To be honest, I can't really recall what was the recent smallest investment, but I think our initial investment in Zalando was, I think, 250,000, if I'm not mistaken. But that was like ages ago. Nowadays, it's more 500,000 initially, which we can do. For example, if there is an angel round, we can do less. We can also do 300,000 if there's an angel round and we don't want to, kick anyone out. So it's fine. There's still some space left. The founder wants us on board, but not as a major shareholder. More normal ones are 500,000, above 500,000, up to 2 million, where we get 10 to 20% shareholding, depending on the risk profile, the stage of the company, etc. That's more normal from the initial stage. We also do 5 million tickets initially when there's more Series A-like company.
Yeah.
Then we do the follow-ons up to 50 million.
Hmm. And so you've mentioned 500K. So at this stage, the company must be past MVP. They must be hitting product market fit at least
No,
and have some traction, or what?
no. So we did an investment in a company called i2x.ai of
Hmm.
Michael Brehm, who was a part of the StudiVZ management. And we invested 1.3 million euros, and it was him and I think 2 people working there, and not really a product. The Zeitgold team here in Berlin, that's accounting automation AI. It was the 2 former SumUp founders and the Israeli co-founder, CTO, and a very, very rough MVP with no customer, or maybe 1 customer,
Hmm.
and we invested 1.5 million. And that was 4 years ago already. So no, we don't need much. But the question is for first-time founders, if we can get enough conviction on the team and the product early on, that this could be a billion euro opportunity. Because since we have a 306 million fund with our fund 7, we need to see a certain potential in the company. And sometimes we see that at a very early stage, which could be because of serial entrepreneur team, large market, etc. And sometimes we rather wait for another round. For example, Legal OS here in Berlin, great founding team. But we didn't invest in the very early seed round. Speed invested in Seed Camp. And then we invested a year later when they could show more customers. Like I think they had 3 customers at that stage.
Hmm.
So it really depends on how we see the risk profile.
Yeah, it's really interesting. I haven't heard this example you just said, that somebody with just an MVP with almost no customers would get this much money, because that's usually the advice is to bootstrap until you have some traction and then go to the VC. And then they did it the other way around. Was there a specific reason, like why did they need the investment?
Well, you have to build something, and for Zeitgold, it's a lot of tech investment. It's machine learning.
Mm-hmm.
You have to gather a lot of data. You probably won't make that much revenue at the very early stage. And for Zeitgold, was especially at no margin or even negative margin. So every euro you're making, you're losing a lot. With marketplaces, it's the same thing. Usually, you start with very low margins. Because you have to still build liquidity and transact on it. So yes, you need the money. And I can tell you, I mean, there are some good examples in Berlin, like Pitch, the PowerPoint challenger from Christian Rebener. They get the money very early on, but those are serial entrepreneurs. Yeah, so we can actually predict that they can build a company.
Right.
So it's okay to take the risk, and it's okay to give them a lot of money, because then they can also already hire very good, strong people at a certain scale and build the product faster. That's the bet you're taking.
Right. So these German companies are not really just looking at Germany. These are like global companies just based in Germany, right?
Yeah. There are very few companies where we would say the German market is large enough. Like Otto Nova, which is something like Oscar health insurance in Germany that we invested in. Usually we're looking more at companies that can go international very early on, especially when, so for my focus, which is more on the software and B2B space, we very early discuss the US market.
Got it. And so what's the kind of exit strategy you're looking at? Because you're investing in these high growth, super big kind of potential companies with a huge risk. So do you tell them upfront, like, hey, we want to get an exit in, I don't know, 5 years, or we're looking to hit the unicorn status, or what kind of is the typical exit point for you? I know it's always different, but from the experience, I don't know if you can
Yeah.
share some insights.
It's obviously driven by opportunity. We had very fast exits. Quandu was an example after more than a year. And with some other companies, they are still in our portfolio and they are older than 10 years. But we still see great opportunity. So sometimes you have to wait for a certain opportunity. But what we would never aim for is an IPO, because the IPO environment is very cycle driven. When we look at the initial investment, we try to find M&A players, which is obviously difficult to predict, and that's 5 years past 5 years plus. Usually, it takes more than 5 years to build a significant company. And then obviously you don't know what the potential buyer would look like in 5 years' time. So that's one of the risks we're taking, that at the time when we should sell the company, because also our funds are ending after 10 years plus. So we have some time for our funds. Maybe the buyers are not there. But that's one reason, by the way, why that might be another question you could ask. When should we invest in a company? At what stage of our fund? We raise funds every 3 years.
Mm-hmm.
So you're never at the end or at the beginning of our fund cycle.
Mm-hmm.
So you always have the time to develop your company.
Okay. Yeah, that's interesting, because I know like on average it's like 7 to 10 years and then they close down or something. So yeah, that's pretty
It's more
interesting.
than 10 years for us. We can keep a fund longer. Then we don't get the fees anymore and everything. So that's some technical issues. So we have an incentive to close the funds earlier. But if we need the time, or especially the companies need the time, we can do it, and we're doing it right now.
And do you have any specific industry? You've mentioned B2B software startups. However, your portfolio, Flixbus and then all the other companies, these are consumer companies, right? So, and I know we have our own agency where we raised a series, I think it was Series A for one of our companies that's separated from the agency. And then it's so hard to grow a B2C company. It's like much harder compared to B2B SaaS company, something like that. So why did you pick B2B software startups? Or maybe if you have some other maybe industry focus, why do you now focus on that space?
Yeah, we have different approaches in our team. We have some of my partners, they like investing in strong founders, and they're looking for certain characters. And some others are really trying to have some kind of sector focus, because they feel you need certain expertise to understand that sector. For example, we're not investing in hardware or life science because we simply don't understand it. We're also not very good in IT infrastructure. But when it comes to consumer models, we have quite some insights from 20 years. So we have certain pattern recognition. We can take higher risk. Maybe we can even obviously help companies with those insights. And we don't feel that scaling consumer companies, I mean, it's always hard to scale a startup, but it's not that it's harder to scale them. Actually, we see higher risk. So the risk return profile is different. When you look at also IPOs and US market, you have those extreme outliers, and that's what you want, like our Zalando investment. And then you have a lot of failures, but usually the outliers are much larger than when you look at B2B. B2B is a bit more, could be smaller, although nowadays we see some very strong IPOs. But then the downside is not that extreme, because they address a certain problem. There are people willing to pay for it, so you can do some kind of solid exit. But nowadays, you have actually even have the big exit. While I focus on B2B, I had a company that sold to other B2B customers. So I kind of understood that. I felt we still missing this kind of expertise in our fund. So I wanted to focus on it. It's a little bit different sales model in B2B. But what I really appreciated was the knowledge of my partners when it comes to marketing and B2C sales, because nowadays everything is merging. When you look at smaller ticket sizes, when it comes to sales to customers, like SaaS models, actually you want some kind of prospecting, lead generation through marketing, which is very similar to consumer when it comes to the approaches. And then you convert on a historic sales model, kind of account executive style. So that's, I think, a strength that we have. It's more difficult, obviously, when you look at larger enterprise software deals, 100,000 plus annually, where it's very much driven by multi-stakeholder sales. Yeah, there the learnings are a little bit more limited, but then we can really help with knowing how to scale organizations and management, etc.
Yeah, I've been in B2B sales for 5 years. I love it. It's much
Yeah, I love
easier.
it
I
too.
mean, it's super easy compared to.
And by the way, a little hint for being a VC. I mean, VC, I think Bill Gurley from Benchmark said it, 85% is a sales job. So if you're good at B2B sales, at least you know something that could help you as a VC.
Definitely. Maybe in the
You're
future.
selling money. Yeah.
Yeah. And one thing, it was interesting you mentioned these sales, the sales process in B2B, how you can actually, set it up, and it kind of works well. However, also one big problem, I'm working on a product, it's still an idea, but it's for B2B buyers, because if you look at data from Gartner or something, you're looking at the buying process for B2B is getting more complicated each year, and the buyers are complaining. Are they 77 percent of buying decisions in B2B are terrible or are
Mhm.
not as easy as the salespeople say, or you have all these tools and automation and AI everywhere in sales, but the buyers are not feeling it, and they are actually the decision makers at the end of the day. So it's funny how the market is like super exploding with these tools in sales enablement, and you have outreach company doing is like a unicorn now, and then
Mhm.
it doesn't actually make that much difference. If you look at the products, they are almost the same, and eventually the buyer is the person who makes the decision. They're being bombarded every day now, so I wonder how it goes. So I'm trying to build something for the other side, not for the sales, B2B sales side, but B2B buyer side. So we'll see if that works, but maybe.
Cool. Yeah, I think everything that helps making decisions faster is very welcome. We have a company called Scoutbee, which helps with finding new suppliers.
Mm-hmm.
It's a little bit like a Google model. They recently did a large round, 50 million with Atomico and Lakestar. And it's also for the buyers, right? The procurement department, making their lives easier, finding the right suppliers, the right products. Yeah.
Yeah, exactly. And most of the decision makers are now millennials, and they don't like phone calls, and they prefer, if there's a SaaS platform that can do that for them, they are willing to do it. So definitely might be the future. So
Mhm.
in terms of maybe a due diligence process or something like that before you invest, there's, especially with software startups, there's always uncertainty, and we've had many cases where we were called as an agency to run reviews for like a backend code or something before the VC invested. And we've learned that, oh, this is a terrible investment, because as soon as you invest in them, they're going to spend all the money on development because they are lying. You don't really know the technicalities of the code, and there's so much misinformation. So what do you have? Do you have any process, or do you have any people advising you, or how does it look like before you invest, let's say, in like a software
Yeah,
company?
I think there's the pre-term sheet process and the post-term sheet process. On the pre-term sheet side, it's a lot around explorative due diligence. So we're trying to understand, is this the right team? Is the market large enough? Is there, does the product create a certain value to customers that is strong enough to build a large company? Like all these typical questions that you can read everywhere, we're trying to get a hold on that. So it's commercial due diligence mainly. If it's highly dependent on technology development, then we would do also some technical DD beforehand. And then post-term sheet is mostly confirmative due diligence. So you do some code checks, code reviews, financial, legal, etc. But it's basically making sure that you're not missing any major risks, because it's not our money that we're investing, but it's pension funds, fund of funds money that we're investing. So let's go to, I think pre is more interesting. And the main thing we're doing is it's ourselves. So we're meeting the founders, we have gut feelings, we know people, we're analyzing data, we do some research, desk research about market sizes, etc. And then for us as a fund, our style is really a partnership approach with the founders. So we discuss open questions, we discuss risks that we're seeing, and we're looking for answers from the founders, and see how that goes. We don't like somebody saying, hey, so like the very salesy things where people pitch to you and you basically pitch to them, and then that's not our style, I would say. And then we might use experts when it comes to more complex topics in machine learning, AI. I use a lot of people also, especially from our portfolio when it comes to software topics, because I'm not an engineer, computer scientist from my background. So that could be something. And then I like to bring a lot customers. So testing the product, pitching to customers because I did it myself, and then maybe I can send a reference to the company, and that reference also gives me some ideas also through our portfolio. So really seeing how the market reacts on it. On the consumer side, it's similar. So either we do a survey pre-term sheet, kind of with agencies. We might test the product ourselves even, which is obviously a difficult one because the statistical relevance is not there. But just getting a feeling and answers. It's a little bit like the work of a consultant. When I was at BCG, you ask a lot of questions and then you get a feeling for the answers. How good is the founder answering it? How profound are the answers? What's the style of the founder? For us, the interaction is very important.
And how many investments do you make every year?
Per person, 1 or 2. Could be also 0 sometimes. For a fund, it's maybe 12 to 16, 17, really depends. We don't like it. We have to deploy the money somehow. So that's kind of our task, and then get a return. That's the main task. So paying much more money back. But we try not to have any pressure investing.
Do you sometimes co-invest with some other funds or somebody who knows somebody, let's say in Nuremberg or somewhere else? I don't know, like a local VC?
Yeah. We like investing a lot with angels and seed funds. And sometimes we even send deals to them because we feel we still don't see the opportunity, and we're very transparent why we feel there's not the opportunity right now for us. Because for some other funds or even angels, and it was the same for myself, it's sometimes fine to sell the company at a smaller size. Yeah? They have a different risk return profile. And then when it comes to investments in areas that we're not so much familiar with, technology-wise or maybe even country-wise, we like to co-invest. So Lingo Kids, we invested with JME Venture Capital. In Israel, it was with Vertex Ventures, and in Finland with Maki VC, as to give you some examples. And then we share the same shareholding. We might increase our shareholding later more than them because we're a larger fund. Yeah, but we do that a lot.
So from 10 investments, how many from your experience are going to fail? Like, is it more than 50% or?
Yeah, define failing. If you say going bankrupt, it's not that
like
many. 2 to 3 maybe. So not that many. I think we have a large portion of companies that are not growing as big as we wanted them to grow, but they're still good businesses. And then we either we exit them, or maybe they even continue and buy the shares from us. There are different scenarios there. But at least one should be a very, very strong outlier, and 2 should be very good. So we like to have, we look more on the fund perspective. On the fund perspective, we want to have 2 fund returners. That would be pretty good.
Got it. Do you know why Series A is smaller usually in Europe than in the US? Like the size of the deals it's much smaller. Like a seed round in the US is usually like a Series A here.
Yeah, it depends. Yeah, some of them are even larger. It's really at Series A stage in the US, the market size is bigger.
Yeah.
Already. So you could see that maybe you reach product market fit, and now it's about finding the right growth approach. So it's just a larger market, so you can take more risks early on.
Got it. So for founders, B2B founders maybe who are listening, and if they want to maybe send you an email or something, how many emails do you get every week from like potential founders asking for an investment, or how many applications do you receive as a fund? I know like it can be like in hundreds and thousands a month, let's say. And then what's the percentage of like do you look through all of them, or do you have like a process for that? How does that work?
Well, again, it's different style for different people. I would say it's about 1 per working day, so maybe 200 a year. And then obviously when you go to events, there are more deals. Sometimes there's the season. So February now, it's happening more in March and April, then again in September and October. But I think that's a good ratio. We also get a lot through the website, which is usually not a very good channel. The best channel for us, at least how we work, is through contacts. So we get a referral from one of our founders, from some angels, seed funds, etc. Direct approaches usually tend to get less attention from our side.
Got it. So maybe there's a way to stand out in your inbox, but it has to be really something great, right?
Yeah, I'm really bad with my inbox at the moment, to be honest, and I have to apologize to many founders. I'm really slow, but that's the thing. For us, the portfolio always comes first, and then second the fund, and then so I'm speaking for myself, but I think also my colleagues would agree that portfolio always comes first. And sometimes you're very busy with your portfolio, but we try to obviously reply as fast as possible.
Well, do you use software Affinity? It's for VCs. It's like a CRM.
Yeah, I know Affinity. So it looks great. We had some data privacy issues. I think they solved most of them. We're also great Office 365 users. So Affinity started with Gmail. I like what they're doing there. we currently Salesforce users. So we're constantly comparing products because obviously automation is very interesting for us because we like to focus on the portfolio companies and all deals, and not so much on working with the CRM system. And then networking is a very important factor for us. So Affinity, I think they can help pretty nicely with that, but also Salesforce has some features. And I think it's also a question of style. Some people like to work with a telephone book or contact list, and some people like to be reminded automatically.
Yeah, I just had them on the podcast. I didn't know that it exists, something like that.
Yes,
for VCs.
It's pretty cool. It's pretty cool. And actually, if Salesforce, if you guys are listening, maybe you just build something similar.
Maybe. So maybe, do you have any favorite founder from Germany or Berlin who you've been following for a while, or who's done some great things that you'd recommend to check out?
Obviously, if you go to my LinkedIn profile, the companies we invested in and that where I sit on the board, these are all my favorite founders. So I don't want to mention anyone in particular. And there are many more people out there who are doing great work where we couldn't invest or where we didn't invest. So yeah.
That sounds good. Do you have any favorite book for people who want to learn more about maybe building the right product or scaling or investing or something like this, being a good founder? Do you have any specific book recommendation?
Yeah, to be honest, I mean, The Secrets of Center Road, I guess they're very helpful. Recently released last year, just to understanding how the industry is working, VCs are working, like the thoughts behind it, and the whole rationale. Else, I think it's really a question of what kind of character you are. I like Principles by Ray Dalio very, very much. But also Getting Things Done is a book that helps me, at least, because I'm, as I said, I'm very curious. I like to do too many things at the same time. So sometimes getting things done is really my big challenge. But other people would say it's learning by experience. I think if you join a consultancy like BCG or McKinsey or Bain, then this also helps you not to read too many books, but just learning it on the spot.
And do you have any app you use daily on your phone that makes you more productive or helps you with something else? Any mobile apps you're using?
Mobile apps I'm using. I can look at my screen right now. So it's a very simple to-do list that I'm using. It's Salesforce, and the one that I really like is Calendly. Mixmax is another one, a great investment by Creandum, but Calendly is really helping because we have systems in our fund, but I think this whole appointment management can do that automatically.
Yeah, I use Calendly as well. So thank you very much for being here, Jasper. And where do you want people to go if maybe they're founders or somebody else and they want to check out your website or connect with you or ask you a question? How can they do that? Where do you hang out online, or how can they get in touch?
With us as a fund?
As a fund or yourself?
Myself, you can see on my LinkedIn profile who I'm connected with, and if you know someone, just maybe ask for a connection. We go to a lot of events. I think the NOAA Berlin is a pretty good event locally here to meet VCs easily, but there are more than those events. And then our website hvventures.com. Yeah, you can go there and check it out. There will be an update soon, so I guess we're as I said, we like partner with people. We like to talk to people. So try to get in touch on events with us. We have a newsletter, so you should subscribe to our newsletter.
Definitely.
So there you can figure out where we are.
So guys, it's Holtzbrinck Ventures. Go check it out. The website will be linked down below. Also the newsletter and Jasper's LinkedIn, so you can connect with him. But thank you very much for being here. It was great to understand more about the venture fund business, and let's keep in touch.
Jan, great podcast. Thanks a lot. Really appreciate you doing this.